Hi, The Economist magazine's latest survey of global housing reported that Australian properties had the poorest return on investments of the 20 countries it evaluated. Now, interestingly, the same survey found that Australian property was overvalued by 61% based on what they called the current ratio of house prices to rents, and also looking at historic ratios. Next on the list was Hong Kong, and then followed by Spain. So is our property market really so overpriced? Is it a bubble waiting to burst? Now, interestingly, I've read similar commentary from The Economist magazine year after year after year. And in the meantime, our property values just kept rising and rising and rising. I guess their argument could be, well, yes, the bubble's just getting bigger and bigger, which means Australia's heading for a bigger property crash, just like overseas. So why don't I think houses in Australia are going to drop in value like they did overseas? And of course, it's not just me. Many economists in Australia, property economists, not chair economists, are saying the same. Well, you see, in some areas, I guess particularly in some outer suburbs, some lower socioeconomic suburbs, some regional areas, property values have already been falling. And they're likely to fall a little further from their highs of earlier this year, especially when interest rates rise further later this year. But overall, our markets are unlikely to collapse because the current property fundamentals, including our strong economy and the chronic shortage of housing, are going to insulate Australia from a property crash. You see, The Economist keeps analysing Australian properties as if they were shares, like comparing apples and oranges, I guess. Firstly, I believe it's wrong to assume that rental levels are a good indication of what homeowners feel they should pay for their homes. But that's the judgment they made. Again, it's a bit like comparing property and shares. They're very different. You can't say they should have a particular yield. Because remember, in Australia, 70% of properties are bought by owner-occupiers. And one of the things that keeps pushing property prices up higher is that, by and large, these property owners all want to live in the same area. If you think about it, about 70% of our population lives in one of 8 big capital cities. And most of these people want to live in the inner and middle ring suburbs, near the city, near the amenities, near their jobs, often near the water. Secondly, over the last 20 years, real interest rates, that's interest rates less inflation, have fallen. They've fallen to about half. That happened in the 90s and it's remained that way. That's going to remain that way. So relative to what they were historically, and this could provide a good explanation why the rent-to-price ratio has fallen. Now, of course, it's not unusual for overseas commentators to get it wrong about our Australian property. Only last month, US financial commentator Edward Chancellor said that Australia was in the midst of an unsustainable property bubble. But his thoughts and those of The Economist have quickly been dismissed by a raft of economists in Australia who remind us that Australian property markets are nothing like the USA or like England. For example, Michael Workman from the Commonwealth Bank, he's their senior economist, said, the story about house prices falling tends to be pushed pretty strongly from overseas groups in particular because they don't understand the growth outlook here and the undersupply of dwellings. Now, we know Australia doesn't have suburbs full of empty houses waiting for mortgagee sales like the United States. Instead, we're not building enough houses. So while we need something like 200,000 houses each year to supply accommodation for our growing population, we're only building in the order of 165,000 dwellings each year. From a supply and demand perspective, America's overbuilt. There are just too many houses. In Australia, it's the exact opposite. We're not building enough houses, and our vacancy rates, they're at historic lows. It's been said that there's been a shortage of something like 200,000 dwellings in Australia. That's been reported by various sources, including Australian Property Monitors, ANZ Bank, the Housing Industry Association, and this shortage of houses will put a floor under house prices. Now, sure, some Australians currently have issues with housing affordability, and they're starting to put off buying their home. But people still need a roof over their heads. People are still getting married and getting divorced, and some are having babies, and others are just having to move houses for their jobs. If they can't afford to buy a home, they rent one. That's why our vacancy rates are at unprecedented lows. And that's pushing up rentals. Look, let's be honest though, house price growth is levelling off. Our property markets have changed, so please don't expect the type of capital growth many of us enjoyed in the last 12 months. The Reserve Bank has deliberately put speed bumps on the road. They've increased interest rates to slow our booming property markets, and to an extent the general economy, and they've done it on purpose. Now what this means is that buying any property and hoping it'll make a good investment just won't work in this new era in property. Now's the time to buy well, in areas that are going to outperform their averages, and then buy properties to which you can add value. In fact, we've got a two-speed property market, with some properties rising in some areas and not in other areas. Values will keep increasing in the inner and more affluent suburbs, and not as much in the outer working class areas. Now, if you really want to understand where our property markets are going, and more importantly, I guess, how to take advantage of the opportunities they're going to bring, and I guess to avoid some of the pitfalls like buying in all those suburbs where prices are falling, then please join me at the only round of public seminars I'm going to be conducting until well into next year. So click on the link below to get full details of my Understand What's Really Happening in Our Property Market seminars that I'm going to be conducting around Australia with finance strategist Rolf Schaefer and property tax experts Ed Chan and Ken Race. When you join us, you're going to discover unbiased research, the sort that sophisticated investors have been using to profit in good times and in bad. You see, the truth is a select group of informed investors, they're smiling, they're excited about all the mixed messages, because they know that while the majority of Australians are going to wait for the confusion to clear, fortunes are going to be made by those who understand what's really going on in our property markets. Now, even if you've been to one of our seminars before, please join us, because look, we've got no properties to sell, and we're giving unbiased facts and the perspective that you can only get from people who've been in the market for more than 30 years. So please click on the link below and find out. Please join us. Now, between now and then, I'm going to keep you up to date on how to take advantage of what's happening in the market through this Property Update e-magazine and these video messages. But it's probably also a good time to remind you that in uncertain times like this, there's no one who can help you quite like the independent, award-winning team of investment strategists at Metropole. Remember, our team have no properties to sell, so therefore we're going to give you independent, unbiased advice. So if you'd like to find out a bit more about what's happening in your local market and what our research suggests is in store, please join us at a free property briefing in Melbourne, Sydney, Brisbane, or in our associate office in Perth. So reserve your place, and there's a link down below under this video for that as well. Now, as so much is happening in our property markets, I'm going to keep you updated 2 or 3 times a week in my blog. So just click on the Michael's blog link up on the top there as well. And maybe you should bookmark that and come back to it regularly to find out my ideas of what's happening. And you can also follow me regularly on Twitter. Look forward to catching up with you at our seminars real soon.